It takes us to our talk of the tape, whether stocks can hit a new closing high and surge even higher from here. Let's ask our experts. Dan Greenhaus, Solus Alternative Asset Management's chief strategist. Lauren Goodwin is director of portfolio strategy at New York Life Investments. Both are with me at Post 9. As you see, welcome. It's good to see you both again. Lauren, how about that? Is this just yet another stop on this sort of runaway bull market train?
Look, this has been a Goldilocks setup for the beginning of year in markets. We have good, strong economic backdrop, including a slightly more inline inflation report last week, which has taken yields off the top. Earnings are good. There's not a lot of economic data to grapple with this week. There was really nothing getting in the way of a good market week this week.
So you had the president at Davos, Dan. I mean, the reason why we're even talking about record highs because there's so much optimism about what this Trump 2.0 administration is going to bring. Lowest tax cuts in history, lowest corporate rate among developed countries, and on and on and on. And you get the point. That's why we
continue
for American
exceptionalism.
Well, that's why we continue to hit new highs, isn't it?
Yeah. Well, listen, America is exceptional, and to Lauren's point, the economy is doing well. Profits are doing well. Earnings season thus far is going pretty good. Netflix is able to raise prices. No problem there. Capital One, I mean, everyone's concerned about the consumer, but Capital One reported. Take a look at the chart in that stock. No problem in Capital One. I'm sorry, Discover. No problem with the chart in Discover or Capital One for that matter. So things are doing pretty well. And I've made this point repeatedly in this program. It's just like okay to be okay with things. It's going well.
Love this quote today from Sam Stovall at CFRA, who says, quote, new all-time highs can act like rusty doors and require several attempts before finally swinging open. I'm not surprised that we have a bit of profit taking today, but I would tend to think that the market will start to power its way through to an all-time high on a closing basis in the very near term. What do you think about this comment? Kind of sums it up pretty well, don't you think?
I think so. And again, with this sort of Goldilocks near-term backdrop, I don't see anything really getting in the way of that playing out. I think as we think, 4, 5, 6 months into the future, there's a lot of push and pull with what this backdrop really looks like. And so from an asset allocation perspective, there's a couple of things that I'm holding tight to. One is that, as we've mentioned, the economic backdrop is really quite robust. I expect growth to slow this year, but closer to a trend level. That's a pretty constructive economic outlook. And we've seen credit and market performance really supported by that reality. I think what's getting in the way of investors at this point from putting more money to work is just valuations. And though we know that's not a very good market timing tool, it does make the bar for incremental return higher for investors. And so we are starting to broaden out, diversify our allocation.
Push a little bit on the Goldilocks deal. I mean, rates are still elevated. You're going to get fewer rate cuts than we thought. We're going to get tariffs. We just don't know how much and to whom, but we're going to get them. Is that Goldilocks?
I think we've seen Goldilocks. When it comes to the risks looking forward, rates, I would say that an upside inflation surprise or rates moving substantially higher, that's one of the biggest risks to my view of market performance. The fact that we've had good market performance this week, I think, is entirely predicated on rates having come a bit off the top. And so, of course, it's a market risk. Inflation risk from tariffs very much in the ball game. And so how does an investor grapple with that? Well, first of all, this move higher in rates since early December, has given investors a second bite at the apple when it comes to credit or fixed income allocation. I think that's really important because as rates moved lower over the course of the fall, it was almost like, if you didn't get in early, you were really too late. Investors have another chance at that diversification year from equity into fixed income, but also within equity away from some of the high flyers.
I use the words risk and reward for a reason because you have the rewards of what the president was talking about today in Davos. Tax cuts, deregulations, it's exceptionalism. Making America great is what he says he is going to do. He already has a great economy that he's coming into office with, so he thinks he can make it better. But there is the risk of what we talked about. The Fed doesn't play ball. Rates remain somewhat elevated, and the tariffs become more punitive, and you start a trade war globally that is problematic for the equity market.
I just got back from the Barclays Inflation and Macro Conference down in Florida.
It must have been riveting.
I thought it was riveting. Well, maybe not for you, but for me, it's right in my wheelhouse. Thank you, Barclays. And the weather. But
I was going to say, without Miami, I mean,
yeah,
were you really booking that ticket?
If it was in Wisconsin somewhere, I might not have gone. But that's why it was in Florida. But anyway, the tone was to echo the point you're sort of getting at, concerned. There is a concern about the immigration restrictions, about self-deportations, and what that means for the industries that are particularly reliant on this type of labor, whether it be construction or leisure or warehouses, agriculture, any of those types of industries. There's concern about tariffs, how big they are. If you get a 10% universal tariff, 60% on China, et cetera, obviously that's going to be inflationary. And by extension, there was a lot of talk about Scott Bessent's pledge to reduce the budget deficit from, call it 7% down to 3%, which was universally viewed as being negative for growth in the short term. Leave aside the fact that there was a lot of questions about whether that could even be accomplished. That all said, those negative tones, if you will, those concerns permeated a lot of the conference. And this is a wide swath of investors from around the world who think about this stuff all day, every day, not just casually. So I, on the other hand, take that bullishly. The fact that those concerns still exist gives me some comfort that the market is not as euphoric as perhaps some would assert. I just sat in a room with hundreds of investors who were pulling their hair out, trying to figure out how all of this could go wrong.
Just to be clear, you're not taking a shot at Wisconsin. You know,
no, it's
want
just
the people
colder.
to love you there. It's just cold.
I was in the ocean for a moment. It was 70-something.
Just want to make sure. Sometimes I need to help you out of a situation you might create.